Hello everyone, welcome to Fearfully Greedy. In today's episode, I will show you my investment thesis for Biogen. It will be like a summary of it because I don't want to make a 2 hours video, but I will give you the main points, the future outlook for the next years, a bit on the FDA approval of Aducanumab, if that's happening, if I think it's not, and so on. So let's get straight to the point. Remember, no financial advice. I'm just sharing a bit my journey. So before doing an investment, do your own research, check the numbers, invest and invest, go with a professional, whatever. But don't take this video as financial advice. It's not, right? So what is Biogen? Biogen, they are pioneers in neuroscience. They were founded in 1978 and as one of the first biotechnology global companies. Now it's based in Cambridge, Massachusetts. And Biogen has led innovative science research, and over this 40-plus-year period, it has targeted neurological diseases like multiple sclerosis, Alzheimer's, Parkinson, lateral sclerosis, ALS, I'm sure you remember that one some years ago, spinal muscular atrophy, progressive supranuclear palsy, and many others that I cannot pronounce separately. So during these many years, they kept adding to the portfolio. Some of the patents went out, they came back in, they added more. And at the moment, it's a very lucrative business. I will tell you that, right? Since we're investors, what we care are the numbers. So what really they do by the numbers? At this moment, they have 4 main revenue segments. First one is multiple sclerosis. This is over 5.5 billion in revenues. First, we have the fumarate, which is Tecfidera, which is the patent is gone this year. Then we have Vumerity, which is another variant of this. It applies to different kind of patients. I won't go to each drug exactly for who it is, and so you will have to dig deeper. I will just do an overview of the numbers, right? But these 2 drugs for 2021 are expected to do 2 billion. Keep in mind, Tecfidera alone was doing over 4 billion last year, right? So that's a bit of the fall that we're expecting this year. As the CEO says, an economic reset or a financial reset, because Tecfidera lost the patent, so now a lot of generics came in and it's losing a lot of revenues, right? Then we have interferon, that's the second part of the multiple sclerosis portfolio with Avonex and fearfullygreedy. First one, 2026 patent. Second one, 2033 patent. 1.6 billion between the two. Then we have Tysabri, which expires in 2033, 1.8 billion. And then Fampira and Thymbriad, only 100 million between the two. Right? Would be like other for multiple sclerosis. Between all of these 4 kind of segments, 5.5 billion in the multiple sclerosis. Then we have muscular atrophy, which is 2 billion because it's only Spinraza, right? The patent expires in 2030 and it's expected to do between 2 billion and 1.9 billion for 2021. Then we have biosimilars, which are drugs that are mimicking another drug, like they are based on another drug that is already approved. We have Benepali, 470 million for 2021, Imraldi, 200 million for 2021, Flixabi, 100 million for 2021. In total, 700 million for biosimilars. Then we have other, which include royalties, collaboration, and other small treatments. We have Rituxan and Gaziva. Some years ago, they were like 2 billion or 1.5 billion revenues, like much higher numbers. But for 2021, we expect like 500 million. Then we have other anti-CD20 treatments, which are coming at 670 million for 2021. And then other treatments that I would add, many of them together, which are 1 billion for 2021. So the guidance that the management has given us on the last quarter is between 10.3 and 10.75, so 10 billion 750 million for 2021, which approximately will be like 2.5 to 2.7 billion net profit, making approximately 25% margin, right? So it's a quite lucrative business, big pharma, here are the bad guys. I'm joking. They are not. They do the drugs that no one would be doing if there wasn't these revenues coming behind them. So the main stories for the company would be these two. So the first one is this erosion of the main drugs on the portfolio, like Tecfidera, which was doing more than double current expected revenues for 2021. As also, we have a similar story with a lesser degree in all the other drugs. Some of them are shrinking, some of them are growing, but most of them, I'd say, slightly shrinking in this year. Maybe it fixes in the next year with more marketing efforts. Maybe it doesn't, but a slower decline on those ones. Then there's another main story, which is Aducanumab, which is a new drug, right? This is a treatment for Alzheimer's disease. It's based on the amyloid plaque hypothesis. And what that mumbo jumbo means is that through PET scans, they do a scan of your brain and imaging tests. They found that people with Alzheimer's disease have a big deposit of amyloid in the brain, and usually healthy young persons, we also produce amyloid daily, but what we do is we kind of get rid of it. We clear the brain of it, but for some reason, unknown cause, Alzheimer's disease patients get it clogged on the brain, and it's thought that it is toxic for the brain cells. So that's in the amyloid plaque hypothesis, that's thought to be the cause of Alzheimer's. What this drug does, it clears these plaques. It actually really works for that. And what happened with Aducanumab, it got very positive returns numbers on phase 1 study. So they haven't skipped number 2, like the second phase study, and they went straight to 2 phase 3 studies with 1,600 patients worldwide, and it started on 2015. This one actually seemed to be working at first with the phase 1, but then it seemed to fail because on March 2019, Biogen stopped the trials when it conducted like a halfway test to see if everything was working, to just not waste everyone's time and money and health. And it seemed that it wasn't meeting the endpoint, so it wasn't working out. And from the data they were gathering at that point, it wasn't working out, right? Then what happened is a surprise that in the fall of 2019, after they stopped the trials, they kept picking results from the last test that they were doing between stopping the trials, and they did a global analysis of the data. And in the emerge trial, there's engage and emerge. In the emerge one, it showed significant improvement in the high dose treatment. So they were taking I think 10 milligrams per kilo of weight. So on those ones, they saw a 22% increase against placebo in the merge trial, right? That's significant improvement. Not everyone had it, only the high dose ones, only in one trial. So it's not like 100% clear, but what happened in September 2020, they submitted it to the FDA for approval. And what happened in the advisory committee on that month gave it a hard no, right? It was 11-1 votes against the drug getting approved. Some back and forth happened, and more data is provided, and they kept delaying the final decision, and now it's set for the 7th of June, right? So this would be a very big drug because it would be the first approved treatment for Alzheimer's disease in 17 years. But what happens is experts are like 50-50, like they think it's a coin toss on this one. It's getting approved because it has some data going for it, some data not going for it. Biogen is saying that if they conducted the trials again with the higher dose only, with the dose for the side effects, so they would be able to lower those. What is also happening is that patients really want it. So that's a plus. Like most of the Association for Alzheimer's have been waiting 17 years for a new treatment, and they will take whatever they can get. So they really want it. And if not, patients will have to wait another 5 years for another trial to get in, right? So those are the main 4 points, what we're seeing. If we weight all of them, I see between 40 to 60% chance of approval. So like a coin flip, it's too hard to tell. Actually, the FDA after COVID has many labels on them. like everyone is watching them, and the data can be persuasive, but also there's some data that goes against it. So they have a really hard task. It's not crystal clear that aducanumab works. It works for some people, it seems, not for everyone, and it has higher treatment costs. You have to do PET scans, you have to do imaging because there are some side effects. You have to. It will be like a economically high cost treatment, right? So for the FDA weighing it all, it's honestly a very hard call, right? So I'd say it's a coin flip. So what does this mean by the numbers? I'm not a researcher, I'm an investor, so I can play with odds, numbers, future probable cash flows, and so on. So I made multiple scenarios to see how the outlook looks for from here on out for an investor on Biogen, and I'm pretty conservative. So in the model, I've always taken a bit off. I'm of the school of being approximately right rather than exactly wrong, and that's why I prefer to keep simple scenarios and be rather conservative with the thesis. So in the first case, I'd say this has like 50% probability of aducanumab not getting approved anywhere. That leaves us with like 2.7 billion free cash flow for 2021, and seeing the growth rates on the model, this gives us around an approximation of value of 53 billion or $350 per share. The second scenario, it's like I given it 15% probability of aducanumab getting approved, but also with a very limited recommendation, that being 2.7 billion for free cash flow for 2021, and this growing quite rapidly to 4 billion in 2026, and then growing at a slow pace, right? This gives us a rough approximation of 90 billion or $600 per share. And then the last case, which is the most bullish, that's like 35% probability of aducanumab getting full approval for treatment of early Alzheimer patients. That leaves us with 2.7 billion free cash flow for 2021, and then growing very, very fast to 6 billion in 2026, and then growing slowly from there on. The approximation of that is 130 billion or over $900 per share, right? I said approximately, if we add these probabilities, that's a $580 bet value, and we're paying 270 to $280 per share. We have to keep in mind that there's also a big possibility of dual treatment in the future, because although we're pretty sure that this is not like the 100% cure of Alzheimer's, it's part of the puzzle. Like it could be treated with another drug. This clears the amyloid, and then another drug does something else, which might be fully beneficial together, right? And also in these scenarios, I haven't kept any major drugs getting approved, so it's only what we currently have, and then aducanumab. And that's not because the pipeline is empty. I'd say it's rather full. So that's another way. It's another possibility for Biogen. We have many drugs coming that will bring a lot of revenues if approved. Well, Michelle, the CEO, says for 2021 we have aducanumab, which is like the main thing, but then we have readouts for depression, choronanemia, ALS, and many other things coming for Biogen. They say it's a changing year for Biogen, a lot of new treatments coming together. But yeah, the main story, as we said, but Biogen as of today has 8 drugs on phase 3 studies, being a sole promoter or in collaboration with another company. And the outcomes of them, I'm hoping you are starting to see that it's quite unpredictable. It's hard to really assess with any degree of confidence, but I'm betting some of them might get approved. Biogen is also keep adding to the pipeline. If you see the news for the company, every month or so, they keep adding on a treatment or a collaboration or something else. They never stop, and some of them will definitely hit. My bet is on the management, the researchers that work at Biogen and its collaborators, with such a long track record of improving the company economics year after year. And not just the company, not just the revenues. They also introduced so many revolutionary treatments for many diseases, and the investment is that it's not stopping now. Still, as you saw in the scenarios, for this investment to work out or make some sense, or not lose a lot of money. We don't need a lot coming together. With just the current pipeline and the current portfolio, just something hitting, and the current shelf life of the portfolio, we still have a very good investment here. The potential for upside is quite unlimited. Like if this really works out, or the other drugs for Alzheimer that they have together, or some of the other drugs for depression, ALS, and so on any of them hit like really work out, it's the potential for upside is quite unlimited. The potential for downside is, I'd say, rather limited. At the end of the day, Biogen is a full play into neurological diseases. Is that a good thing? It helps, I'd say, in focusing in the right problems, addressing those, especially in such a technical field as pharma. You don't want to have like super wide pipeline, because you need to specify your workforce, your talent. We can see that the future outlook for the company, the goal is widening the diseases treated by your portfolio, and attack these diseases, which in some cases really lack the right treatments for patients. If we see the data from the World Health Organization, this is a growing problem that really needs to get addressed, and it's a problem across all income levels, but especially higher income countries like the USA. This leaves us with a question that, if, well, what we see is we cannot really value exactly this company. Like we cannot value the exact treatment market mechanics between different competing drugs, patent expiration dates, clinical trial costs, marketing expenditure, research and development. To make any future exact guesses or anything with precision of the future is rather impossible, I'd say. What I'm happy investing is in the structure of Biogen, their distribution and marketing team, management, collaboration, ridiculous amount of cash built into the pipeline, because there's a huge amount of investment. I mean, it's not certain to work out really, but some of it will. I'm pretty sure of that. And I could also run you through the balance sheet, see how it looks, but I think it won't change the idea of the video. It would be too long, but it looks good. I mean, the amount of debt is minuscule compared to the cash flows that they have. So the balance sheet looks pretty clean. And I won't say the risk is non-existent or minuscule. They experienced competing pressure in all their segments, but that's not new. I mean, research and medical field can be very hit or miss. You invest in billions in a drug, it doesn't get approved, and automatically that investment goes to zero. It's like venture capital investing in startups. You see a demand, you engineer a solution, but you are not sure if it will work out. Is venture capital a bad investment for this? I'd say no. In the same way, if you have a good portfolio of sensible, probable drugs coming to market with a good track record of spotting those and getting them to market successfully, I'm very happy investing along. That's why I'm happy being an owner of Biogen, even for the long term. I mean, if Aducanumab doesn't get approved, I won't sell, right? I'm good holding, I, for all the reasons I have said. Another part very important to invest in a company, to be a shareholder, is cultural management. A great place to look into those is in the 10Ks and 10Qs when you see unresolved staff comments. For good or bad, we don't see anything at Biogen. There are also job review pages where, like Indeed or Glassdoor, where you can see reviews for very different management levels. But those can be a bit adulterated, so take them with a grain of salt. But it gives you an idea if they are very bad or very good. It gives you an idea of the company, and you can read a bit of the comments that criticize a bit the company. There I read that the company is becoming a bit more political lately. They say weaker leaders. Well, Michelle came into the CEO on 2017, and for the share size of the company, it makes very normal that it's becoming a bit more bureaucratic. Overall, it looks like a very productive workplace. A lot of the comments say that. I'm sure different groups and labs are better than others, but their goal and bar clearly is high. They are a very productive company. I'm all in favor of insiders having skin in the game, but preferably I really want them really wanting it. Not just from their options or them holding a small amount just for the image of it, and because it's the Wall Street standard. In Biogen, we see little insider holdings. Michelle has been in the role of CEO for 3 years now, and he holds approximately $14 million worth of stock. And depending on where you check, that's less than 1 year's salary for him. But it's still a pretty penny. Then we have Dr. Denner, a director, holding what is approximately $160 million worth uh, through some limited partnership structure. I'm sure there's something else to that, but in general, at Biogen, insiders don't hold a huge amount of stock. But in a 40 plus billion company, don't expect anyone owning a big chunk of it. That's how it goes. Another question that arises for me in my head is it in my circle of competence? I'm probably slightly outside of my circle of competence, but the numbers seem so clear to me that might be even blinding me. Biopharma business is very hard to value because there are so many unknowns. You really need a full team of analysts to keep track of each treatment's path, number of patients, possible revenues, margin. There are so many variables that I'd say that it's mostly guesswork at that something solid or very solid. I'd say it's probably in no one's circle of competence, because if you see high precision, I would say no one can predict a pipeline of 15 treatments in different wide trial phases across many diseases with a margin of error, I don't know, lower than an order of magnitude. That's too much. With Biogen, we see even having something very solid, like you see Aducanumab. We have results from the phase 3 clinical trial, and still experts are 50-50 on the results. Imagine with the rest of the pipeline that we don't have results yet even. So as my circle of competence, I'm focusing on the track record of the company, the management, the current recurring revenues, and the seemingly wide prospects backed by healthy balance sheet. I like to think that this part is in my circle of competence. Time will tell, and maybe a lesson might be learned from here. Stay tuned for that. So to summarize the investment thesis very quickly, Biogen is a leader in multiple sclerosis and starting to address the biggest neurological diseases with innovative therapies. This has a very long runway, as discussed, but it also has a very promising and wide pipeline. It had recurring revenues from its current portfolio of drugs with enough shelf life to warrant over $300 per share, without counting for any other pipeline treatments coming through. There's a huge catalyst with Aducanumab. By expert 50-50 chance of it getting approved. It could warrant over $1,000 a share. And Coulter pipeline prospects focus seem in line with expectations, and overall they have a 30-plus year track record of great performance. For Biogen, we'll see with the news of Aducanumab, then I will make another video and see what I decide, what I think, how this thesis evolves, how my thinking evolves, and so on. Now a quick update on the channel's portfolio. Since the last video, I haven't bought anything. I'm currently sitting at 22,600 euros with a 13% gain. And also holding around 500 euros in cash. 230 euros of that are from the 10% plus dividend from Interrao last week. I will spend this and this month's money in the next weeks. I have a couple of positions that I really want to get into, but stay tuned for that. Well, that's all I had for today. Consider leaving a like if you liked the video and subscribing if you want to follow along my financial journey and research. Everyone, be safe. See you.